For sure, the speed to market is much faster now for a lot of deep tech innovations. So that makes it more investable than it has been in the past. I mean, I think there's some, older deep tech, great, success stories from decades ago, and they may have taken 20, 30 years, which is to become successful, which is very difficult to invest in. But nowadays you can build your AI models, your e-commerce platforms, in seconds rather than years.
Welcome to another amazing episode of the Tech Business Roundtable podcast, brought to you by Equa.tech, the leader in digital marketing for tech companies. We want to first take a moment to thank you for sharing this podcast with your friends and on social media and helping us grow week after week. Meet our host of today's TBR episode, Ryan Davies. Ryan is the Director of Marketing of Equa.tech and is a dynamic leader in driving business transformation through technology. Over to you, Ryan.
Welcome, everyone, to the Tech Business Roundtable podcast show. This is a podcast show dedicated to shining a spotlight on tech innovators, entrepreneurs, founders, and the compelling narratives behind the movements they've established. I'm your host, Ryan Davies, and I'm hosting today's discussion, Venturing Deep, Colin Webster's Approach to Deep Tech Investments with Colin Webster. Thanks so much for being here.
Happy to be here. Thanks very much.
I think this is going to be incredible. We're going to have tons of takeaways from this. Colin is incredibly strong, well-versed, and I think we're going to cover a lot of different areas and answer a lot of questions that people may have and don't know where to get the answers for it. A little bit of a background for everybody. Colin Webster, the co-founder at Risk Capital, experienced in early stage technology and investing, a great track record and history of working in startups. Previously the co-founder and partner of Hero Ventures as well. Very strong in entrepreneurship, venture capital, partnerships, management, corporate development, has founded a number of organizations, invested in, over 24 companies since 2004 with incredible exit success. Even an inventor. He's got a couple patents out there, the Golden Jubilee Medal from the Queen, my goodness, and a deep experience in e-commerce, AI, blockchain, software, medtech devices. I don't know if there's a question I can ask you that you can't answer, but we're going to find out here as we go on. But Colin, thanks so much for joining us here today. Really appreciate it.
No, you're welcome. No, I'm happy to be here. Thanks very much.
Excellent. And, I think maybe you could color up a little bit more if I've missed anything, but provide an audience maybe with an overview of Risk Capital and its mission, and maybe in the context of supporting deep tech startups, and anything that I missed in that intro.
Yeah, no, I mean, you didn't miss very much. I mean, I think that's a good background. Risk Capital, a firm that I started 3-4 years ago as a venture capital firm focused on seed stage deep tech. Mainly, I mean, we're trying to kill two birds with one stone. My partner Scott and I. One is we feel there's a lot of good deep tech coming out of Canada that is not being funded. So there lies the opportunity. If we have good opportunities and there isn't enough capital around, then we should be able to find, the good ones ourselves and hopefully do well on that. But the other side of the coin is if these Canadian deep tech startups aren't getting any capital and they're failing at that stage when, they're perfectly good innovations and they could be game-changing, world-changing technologies, we should be funding those companies, like from a Canadian perspective. Like we need to invest more into those companies. I mean, for the future of the planet, for jobs, for economy, for everything about Canada. So we're trying to help Canada, the planet, but also it's an opportunity for us. And so we started this venture capital firms focused on this seed stage deep tech, which is what we feel is the gap that exists in Canada. There's just our VC ecosystem is just not broad enough to cover everything. And so we figure we found that little niche, and so that's what we're focusing on.
That's amazing, and I think I guess that gives a good intro to what draws you to the sector. But kind of taking that next step when you're talking about investing in deep tech and that side of things, how do you identify what is promising for a deep tech startup?
I I mean, that's kind of the secret sauce. Like how to,
Yeah, I was
yeah.
going to say that might be a loaded question from from that
No,
point.
but it's okay because I mean, the standard kind of like, well, you look at some new technology, you decide whether you think it's going to have a nice impact on the world or or it's innovative. You look at the team, you look at the if there's any traction. Of course, you look at the technology. You try to put it together from a fundamental point of view, but the reality is you kind of have to have a sense that the technology is, I mean, to invest. So we do all those things, but to invest, you kind of have to have this sort of spider sense that this is going to be, a home run. I mean, there's lots of great technologies that aren't home runs because of a lot of unfortunate situations that come about that would have if the world was slightly different at the time. So it's really hard at an early stage to pick the best ones. So to mitigate that is you diversify, right? So you build a portfolio of 15 to 20 companies, and with that kind of breadth, diversification, there's got to be a few in there that are home runs or successful companies that'll make the fund successful, and then you can go on and do another one.
And right now, I think, deep tech still involves really substantial R&D, longer development cycles in some senses, but at the same time, we've seen such a rise in the ability to accelerate some of these processes from that standpoint. Talk to the audience a little bit about, again, that approach that you have when you're considering different deep tech startups around, is there risk involved between people who are at different stages of the curve, and how deep tech, you're seeing the deep tech landscape evolve as a result?
Yeah, for sure. The speed to market is much faster now for a lot of deep tech innovations. So that makes it more investable than it has been in the past. I mean, I think there's some, older deep tech, great, success stories from decades ago, and they may have taken 20, 30 years, which is to become successful, which is very difficult to invest in. But nowadays you can build your AI models, your e-commerce platforms, in seconds rather than years.
Right.
So makes a big difference for sure. Hardware is still a little bit difficult because you've got to build the physical prototypes, and that takes a lot of time. We haven't really made a huge amount of progress in the physical hardware side, but there are lots of technologies around that help with that a little bit. But the risk associated. So second part of that question is around, how much risk do you take on when you make an investment? And because the Canadian ecosystem, venture capital ecosystem, is mostly made up of financial people. I mean, I think there's two routes into venture capital. One is you have a financial background, you work for a finance bank or VC, you junior to VC, and you kind of work your way. And then the other route is kind of entrepreneur, like I did, build some companies and understand it from that perspective. Either way, the Canadian venture capital ecosystem being younger than the US and the European, there aren't a lot of venture capital people with sort of, deeper tech backgrounds in their education. So I did electrical engineering at Princeton. My partner did computer engineering at McMaster. We have a pretty good understanding of some of the niches, and in areas that we don't, we have a bunch of advisors on board who we refer to. So if we're looking at a deep tech project, which would not be invested in by the typical Canadian VC, because they wait for more traction, because they don't really understand the technology, granted, and they don't want to take that risk, so they wait for more traction and later stage. We get to go and look at the technology and make our own personal assessments on what we feel about the technology and take on that technology risk. And we don't mind doing that because we enjoy it, and we feel we can do that. So we have some deep expertise in material science and AI and computer technology, robotics, that we can leverage and try to understand the technology as early as possible and make a bet. And so and we're pretty unique in Canada. We were the first venture capital firm to build a entirely deep tech focused firm. And so we get sort of the pick of the litter. And but now we've seen a few more other deep tech companies arrive since we've been around, and that's really good for the ecosystem.
That's great. Yeah, and I think, that speaks just to deep tech on its own, and kind of what it covers, that same acceleration, right? Where you've got your early adopters and that makes it great, but now you've got the people that are continuously catching up and taking part. And I think there's no shortage. I'm sure you get pitched all the time that there's no shortage of companies that are out there, or businesses looking to grow and looking for that investment. And I think you kind of touched on a little bit about the importance of, the collaboration when innovation, it needs that collaboration between the startups, research institutions that they're working with, maybe industry partners, or like you said, hardware partners, and then investors like yourself, right? So, how do you see the importance of that for building and fostering these ecosystems to support deep tech ventures? Because I think that's exactly what Risk Capital is doing.
Yeah. Yeah, I mean, it's an expression, it takes a village. I mean, yeah, you need a lot of universities are involved, supporting the federal government, or the local governments are also, giving grants out at an early stage, to help these companies. There's a lot of support to get them to a place where there's a little bit of traction. There's very little support to get them commercialized and into the market. So we're on our soapbox talking about it. The U.S. venture capital industry has arrived in Canada. I mean, when I was doing angel investing even 20 years ago, there was no Americans up in Canada doing seed stage, let alone the top tier American firms. Now we see, I mean, we've done a deal with Coastal Ventures, top tier US firm, doing a seed stage deal. We've done another seed stage deal with DCVC, another top tier deep tech fund in the US. So the US have acknowledged or realized that there isn't enough deep tech seed stage money for what we have, so they're up here doing it. But yeah, we're cooperating with everybody just to kind of get them done. And of course, and at the seed stage, unlike later stage investments are probably, when you get one, you kind of like take as much as you can, and maybe there's a couple other people involved, and you often don't get a chance to participate in the later stage ones that are really good. Seed stage ones, we collaborate with a lot of other firms that aren't necessarily deep tech seed stage, but if we're involved, then we can partner with them to do the investments and help the companies.
Yeah, I think being that's just so incredibly valuable too, to partner with somebody that can advocate to more partners, right? To be able to, like you said, grow that ecosystem and things to that extent. I'm going to shift gears a little bit, because I had this one a little bit later in the conversation, but I think, again, you're overseas right now. You just talked about a little bit about the global landscape, and the global perspective of deep tech, but with the evolution and, the rapid growth, are there specific regions or markets that you think are becoming, maybe a hotbed for deep tech innovation, or maybe again that are just overlooked, or anything to that extent? Or is this just a global, anywhere you go, there's going to be growth in this area?
Yeah, I mean, if you look at the landscape, so when we started looking at the landscape a number of years ago, we found that there was a lot of traction in deep tech investing in Europe and South Africa and Israel. Those were like the leaders of deep tech investing. So those were countries that realized from a federal level, I think, but all the way down to venture capital level, that the deep tech innovations coming out of their universities and labs needed to be supported. And there's lots of infrastructure around that. I don't know who is bigger between those three, but South Africa, Israel, and Europe, huge. Second is the US, so a little bit behind, but later acknowledging the importance of deep tech, and now we have significant deep tech funds in the US, and then Canada's like third. I mean, in terms of getting this ecosystem up and running and fortified the way it needs to be. So we're new, but it's a good opportunity really to be a part of, basically.
Yeah, I think maybe from both sides, it's a great opportunity, right? So if you're an early stage founder, that gives you a little bit of a, again, maybe the resources, like you said, the infrastructure isn't set up, but at the same time, you've got a little bit more attention. I guess you're not as buried as some of the other places where they've maybe accelerated in some areas, or there's a bit more crowded competition essentially going on, right?
Yeah, that's true.
Yeah. So, I'd love to kind of go a little bit further here. And I think this is probably the question that you get asked, I would assume, all the time is, advice to founders of deep tech startups seeking investment. Are there key elements that they should emphasize when people are pitching to you? Are there elements that really stand out, or where you say, look, these are your table stakes, and then from there, this is what's really going to potentially differentiate you?
Yeah, I was an entrepreneur for a little while as well, so I'm familiar with fundraising from that perspective. I think if it's important to really get a handle on the VC landscape. So if you're going out to raise money, and that's even a question in itself. A lot of entrepreneurs think raising money from a VC is a big success story. For me as an entrepreneur, building a company and not having to raise money from a VC is a big success story, because then you get to control it and own it and manage it yourself. But of course, if you need the capital, you need the capital. So then you go to various places for that, including VCs. But first of all, to focus on what stage you're at and what VCs are investing in that stage. If you're like pre-seed, and these terms are very loose anyway, but if you're pre-seed, then coming to us, it's not really that much worthwhile. Maybe you should pitch to us, but we don't do pre-seed, so you're maybe not wasting your time, but maybe you're wasting our time. Or you gotta understand that if you see a no from us, it's because we're not in the right area, the right stage that you're at. So learning who is funding each stage is really important, and understanding what that means, and it could mean different things to different venture capitalists. So for us, we like to see valuation of like 10 million and below. We like to see product finished and in the hands of potential customers. Maybe no revenue, maybe revenue, but at least customers are actually, someone's looking at it. It validates that it's actually a done product if it's in the hands of a customer, even if it's not complete. It doesn't have to be all the bells and whistles, but as long as it can be looked at, valued, or evaluated in the hands of a customer, that's kind of the stage we're looking for. So we have sort of our sweet spot of how we define seed stage, and the technology has to be fairly complicated, AI or robotics or computer or advanced materials or something like that, that we like, and we can do a deep dive on and try to understand the tech as much as possible. So that's the answer to the question is who should be pitching us, is you really have to find, like, we see tons of companies that are deep tech, but they're not in that particular space and that stage or whatever. So they're either too far gone or they're too early or something like that.
Yeah.
So knowing your audience, pitching your audience is a good learning lesson for sure. The other thing is we look at a lot of we like to see if there's something that's patentable or patented or patent pending. That's kind of one of our definitions of our deep tech world is there something innovative, patentable? And maybe you don't patent it, maybe you do trade secret and root instead, just fine too. But there's got to be something that is innovative. Risk Capital doesn't really look at companies that just build a service or something that's a bunch of existing technologies sort of put together to try to make life easier for like a restaurant or something like that. We don't really look at that kind of stuff.
Perfect. And I saw in your profile, you enjoy treasure hunting, and I think that probably carries over into this space as well, right? So, maybe you can share a success story or an example of one of the deep tech startups that you've invested in, and maybe the impact that it's made in the respective industry in terms of finding that treasure.
Yeah, we have a few. Our fund's not that old, and so the successes don't really come till later. But we've had one exit and a couple of pretty good stories. We had one company, they built AI software to go through hospital records. So like in a typical hospital in Canada anyway, I think in the States as well, you have a team of humans that go through the hospital records, the doctors, patient records, and extract out all the billable codes that get sent, in the case of Canada, to the government, in the case of the US, to the insurance companies.
Mhm.
So ideally, originally they wanted doctors to, when they do a procedure, to write down specifically what procedure it was, and so that would translate into a billable code, which is reimbursable. Doctors were never going to do that. Even though they build all these great software systems, doctors are never going to say exactly whether they did that test or this test or the other test and what the codes are. They're just going to write in chicken scratch what basically happened. And so that's why they have these teams of humans going through these records to figure out what diabetes test did he actually perform. And we can look at the previous notes to probably figure that out, if it was a type A, type B, or whatever. And so using AI to go through the records, each individual's patient records, and deciding which ones are billable, how to extract the billable codes, and then present that to the government, increase the bottom line by these hospitals significantly, and reduce the headcount of the number of people they needed in those, rooms looking at those hospital records. So that was a great story, and we invested in that. And they had out of the gate, they had a couple of successes with Toronto Sick Kids and Humber River Hospital, and then they after we invested, they went out and raised money, I think a year later, at 4 or 5 times the valuation that we invested in. So we were quite thrilled about that, and then they exited. So then they sold. They sold actually for slightly less than what they exited it, and what people invested in the second round. But it was an exit, and it was positive for us. So that's a good story, and that was a quick turnaround.
Yeah.
Then we invested with DCVC. It was great because DCVC, big US deep tech company, VC firm, we invested together. So DCVC was happy that they could partner with a Canadian venture capital firm in Toronto, where this company was based. So that kind of relationship works for the American VCs. So that was a success story all around, from the founders to us and everything.
Perfect. Yeah, I think that's an amazing impact, in the med tech space, and just again, like real world application, and using that, like you said, the acceleration of AI was able to, bring this much faster to fruition and have these shorter cycles almost, right? And being able to achieve goals from that standpoint. And
Yeah.
I think maybe that's, again, maybe some of the unique challenges that deep tech entrepreneurs face compared to other even tech entrepreneurs, or just any, startup founder that's looking here. Even though the challenges can be a little bit unique, do you see some common hurdles that you've observed? Where maybe when someone's pitching, you say, get this figured out and come back to us, or whatever it is, and how founders should navigate these challenges successfully.
Yeah, I see people present their financials in a pretty broad range of ways, and it's a pretty quickly a red flag when you get a projection. So we always ask for projections. What do you think your company's going to do in the future in terms of revenues and things like that? And there's a pretty standard way of presenting a projection. It's like a there's a balance sheet. There's a profit and loss statement. It's like a pretty standard. And if I'm surprised at the amount of times I get presented with financials that are in a form that's not very standard. I mean, maybe something as simple as the revenue is at the bottom and the expenses are on top. I don't know. I mean, it doesn't really matter really. But all of us, if when the projections aren't expressed in a very standard way, because I'm looking at these things all the time, I like to I can, immediately evaluate something very quickly. It's strange. It's a sort of a red flag that they haven't really got an accounting person helping them with their projections. So it's totally understandable. A young entrepreneur who's a tech person, science person, whatever, they don't know about how to present the financial side, but to not go out and get help for that and get it done in a way which is palatable to a future potential investor, that's an immediate red flag. I mean, for sure. I think the biggest challenge is for us in deep tech, which is different from other investing, is you get a lot of science people who are the inventors of this new technology, and they're in universities working with professors or whatever they're doing, or they're in their labs, and they decide somehow that they want to commercialize this technology. So they start going on down that path. And of course, the path is you probably get some patents. Maybe the patent's already done. Then you got to start building, maybe forming a corporation and doing some financial projections like I was just talking about, and putting the company together and presenting it. And so we look at these people a lot. And one of the big questions for me is this person someone that really wants to build a company? I mean, I think there are a lot of people who are in the science world that say they want to build a company and they want to commercialize and they want to make some money. But when you dig deep down, you realize they're science people at heart. And when it comes time to spending the afternoon, going over the finances and keeping track of accounting, or to go back into the lab and do some more tweaking and stuff like that, if they want to go back into the lab, because they really don't like anything about running a business, then their heart is not really in running a business. You don't really want to invest in those people because, their heart has to be running. I feel sorry for a lot of scientists that end up building businesses that are successful, because to be successful, you've actually got to spend all your time building the business, which is zero time in the lab, zero time in the stuff that you probably really love. But, if you make that jump, then that's what we're looking for. And so oftentimes we'll be interviewing people to make investments. And, if we come to the conclusion that they really just want to be in the lab, they don't really want to build a business. I mean, they want to make money, but they don't really want to spend the effort building the business. Yeah. And once we figure that out, then it's, we don't want to really invest. And so that's one thing that they should ask themselves. I mean, independent of us, they should really ask themselves whether that's what they want to do.
I love that story, right? It's I want to work for myself, and then they see the work. Well, I don't want to do this work for myself. I want to do the work I wanted to do for myself, right? So it's a really, like you said, it's a completely different. You're wearing a totally different hat. You're not even the same person. You're wearing a whole costume. It's like a superhero, right? You're in something totally different and not the person that you're supposed to be doing this sort of thing. So I think yeah.
And the not in deep tech world, you get a lot of people saying, yeah, I'm going to start this e-commerce platform to sell clothes or whatever they're going to sell or whatever. They really want to build a business, and clothes is sort of secondary. You know what I mean? So,
right.
So that works really well and you see that a lot. They want to build a business. They want to make a lot of money. And what they build is secondary. So it's the opposite in deep tech, where what they built is like the primary. And so you got to watch out for that.
Right. Yeah. What they build should be the vessel, or just the the background, right? What you actually need is the vessel to get rid of that product or sell that product or promote it, right? So that's incredible. I absolutely love that that piece of advice and that thought process. I think as we're coming to a close here, Colin, I'd love to, maybe, I know it's tough to do the crystal ball type of stuff or things like that, but do you see any trends or anything in the deep tech space for entrepreneurs, how they can better position themselves to capitalize on some emerging opportunities?
I mean, AI is doing really well. I mean, there's a generative AI, which is, for me, not so interesting. It's more like the pure AI, trying to not replace humans. The AI, there's been a lot of AI trying to replace humans, which is, human experts, which is not so great. But there's lots of things that are sort of technical, wet lab. The coders are called at Sick Kids Hospital to go over, hospital records, like I was talking about earlier. There's lots of niche AI things out there, which can be solved, or you got to be careful with regulatory. So in the medical area, medical AI is huge, but there's one thing that I learned recently, which is you don't really want to replace doctors with AI. You don't really want to replace the experts. I mean, you kind of do. I mean, if the AI is better than the human, you do want to replace them. But from a financial point of view, you don't want to invest in that, because that's not something the world actually wants right now. I mean, we're not, I would much prefer to find out that I had cancer because the doctor who looked at my pathology slides was wrong, than to learn that the computer that looked at my pathology slides was wrong. Like, I would be much more upset if I found out the computer made a mistake and that's why I got cancer. Whereas if a human did it, I mean, human doctors make mistakes all the time. We've kind of accepted that as part of the world in a way.
Yeah.
But regulatory does not like the world where a human or a computer makes a mistake on a human. That we're not ready for. So there's been a lot of investment in that area, and tertiary areas around that, and other expert areas in other fields, and that's been not so successful. But you take a little niche of AI, some small little thing that just takes a bunch of time, bunch of cost structure that you can replace with AI, just technicians, things like that, niche AI. That's a great industry that I think that'll grow the fastest going forward. I think, looking at my world.
I love it. And then, I think we'll go for one final, maybe deep thought here with Colin Webster of what, based on your experience and your time and everything you've seen, maybe just one, whether it's a strategy or a mindset, something just to give a piece of advice to founders in deep tech to help them, contribute to their success of this incredibly, challenging but innovative space.
Yeah.
And you've already shared like 50, so that's the hard part.
No. I mean,
more, yeah.
We went with founders. I think patience and continuous effort. Like, it takes. There's an expression that you're always surprised at how little has happened in a year, but you can't believe how much has happened in 5 years. So there's sort of an expression where a year goes by and you feel like nothing's happened, like you're still grinding away and you still got the same problems, and like 1 year is just like nothing's happened. And then but then 5 years goes by and you realize the world has completely gone upside down. Like, so you just have to have patience, and you have to be persistent and stick with what you're working on, and focus. That's another thing. I saw a company yesterday, and it's an advanced material company. They started the pitch with pretty good focus. Like, they've got the material, they know what they want to put it in, it's going to be great. And then halfway through they said, oh, but if it doesn't work, we can put it in this material, or we can start from the raw material and sell that. And all of a sudden they're losing focus very quickly, which is telling me, they've got this material and they just don't know what to do with it yet. And so, it's good to have a market and a customer and a lot of passion around that particular thing. In fact, really, one of my companies, we were doing online auctions, and we had all these different types of online auctions going on, and we had to pare them all back one day to focus, because trying to be too broad at one point can be detrimental to the company. I mean, it can be good when you're really starting, because you don't really know what's going to grab, and you're still trying to find out what's going to grab. Yep. But at a certain point, once you've got some traction, some revenue coming in a certain area, then you got to really evaluate and sort of cut some of your revenue streams, which is always a difficult thing in order to keep the focus going.
I think it's a perfect place to kind of, wrap it up. And I want to thank you, Colin Webster. Thanks for this incredibly amazing podcast and for your time today. I think there was just so much here for people to take away and to learn from. So thank you very much for sharing with our audience. And I'm hoping we're going to be able to have you back again, because I think, just even talking about delving into that med tech space or any other space, there's so much here we could still uncover and talk about. But thank you very much for your time. I know you're traveling, and just appreciate so much you take time out for us today.
Yeah, thanks, Ryan. No, it's great talking to you. Thanks a lot.
Excellent. Well, I want to thank you, Colin Webster, for this amazing podcast today, Venturing Deep, Colin Webster's approach to deep tech investments. I think there was just so much to take away from it. And I know our listeners are going to be able to take so much here and get in contact with you. To be able to do that, Colin, how could they do that?
Oh, just go to Colin@risk.capital. I'll go to the website, put in some information, we'll get to you.
There it is. So nice and simple, be able to reach out and get some more, again, whether it's advice or whether it's, again, you want something to pitch, whatever it is. Colin's here. He's obviously incredibly well-versed and the guy that we want to lean on for that. So thank you, Colin.
Happy to help. Yeah, happy to help anytime.
Wonderful. I love it. We always love connecting people here with people like you that can really help them accelerate their business and their goals. So thank you, Colin. I also want to thank our listeners. We can't do what we do without you. So until we meet again with another amazing TBR episode, I'm your host, Ryan Davies. Thanks, everybody. Take care.
Thank you, Ryan, for this amazing episode. Thank you for joining us on the Tech Business Roundtable podcast. We hope our discussions have sparked new ideas, expanded your knowledge, and empowered you on your entrepreneurial journey. Don't forget to hit that subscribe button and write us a positive review. Thank you for listening to the Tech Business Roundtable podcast show.